What if the most bullish call on Uniswap in years, a major global bank telling you Uni rises 40 times to $100, is built on a number that doesn't actually exist yet? Price sits near $3. The chart just bounced off a falling wedge it's respected since 2021. But there's a catch hiding underneath all of it, and once you see it, you can't unsee it. Here's why this matters now. Uniswap is at a crossroads where the fundamentals and the chart tell two completely different stories. One says institutional money is waking up and real-world assets are flooding onto the protocol. The other shows a token that's bled for years, trading below every major moving average. The mistake is picking one and ignoring the other, because the truth lives in the gap between them, and that gap is where the asymmetric setups hide. Let's start with the bull case because it's genuinely strong. Standard Chartered, a major global bank, just initiated coverage on Uniswap with a target of $100 by 2030, roughly 40 times today's price. Their logic? They expect tokenized real-world assets inside DeFi to grow 37 times by the end of the decade, scaling from $340 billion toward $4 trillion by 2028, with DeFi capturing 30% of that flow, up from 3.5% today. Uniswap, they argue, is the one rail traditional finance can't replicate. Uniswap already went live with tokenized securities. You can now trade exposure to names like SpaceX, Apple, Tesla, and Nvidia directly through its apps. Over $9 billion in real-world assets have already moved through the protocol, across more than 2.5 million transactions and 140,000 wallets. Even a tokenized S&P 500 product is gaining traction, with around 63% of its volume settling on Uniswap. And its routing engine now wins more than half, about 52%, of MetaMask's aggregator decisions, without adding extra fees on Uniswap trades. The thing everyone said to route around is quietly winning the routing war. Then there's the regulatory door. In June, the SEC proposed scrapping a 2-decade-old rule, the trade-through rule, that blocked pool-based pricing for regulated stocks. It was one of the biggest structural barriers stopping stocks from trading like crypto. Remove it, and automated market makers like Uniswap step out of the gray zone and into the main arena. On-chain, the activity confirms it. Whale-sized transactions just hit a 7-month high, active addresses a 4-month high, and Uniburns recently set a daily record as new fee sources came online across multiple chains. The founder is openly bullish, pointing at a pipeline of new versions, aggregator hooks, and more chains. Grayscale piles on, arguing crypto is repricing from narrative to fundamentals, and that protocols like Uniswap return nearly all earnings to holders, part of almost $25 billion in DeFi fees generated since 2023. Here's the catch most channels miss. Uniswap leads in total value locked, around $3.9 billion, and leads in fees, roughly $240 million over 6 months, though only barely ahead of its closest rival. But it's only second in earnings, about $22 million, while Pancake keeps nearly 3 times more. Why? The fee switch, the mechanism that routes revenue to the protocol and to Uni holders, is only half on. The newest, highest volume versions of Uniswap contribute 0. Today, the protocol pulls roughly $46 million annualized. Flip the full switch, and it jumps to $109 million. At a $2 billion market cap, that's a price-to-sales ratio above 40 today, compressing toward 18 on the full switch. Not everyone buys the dream. An on-chain analyst looked at the same numbers and said the $100 target isn't even close. And the demand side backs that caution. Token holders have been flat for 3 years, around 380,000, only third in the category behind larger rivals. Monthly active users have fallen hard from their peak. The loudest bullish signals sit on top of a base that's quietly shrinking. The chart might already be answering. So let's go to the weekly chart, because the daily noise doesn't matter here. Price, near $3, is trading below the 10, 21, and 55-week exponential moving averages, those blue, red, and purple lines. When price sits under all of them, the trend is still technically down. But look closer. Price is coiling inside a falling wedge framed by 2 descending trend lines. The lower one stretches back to 2021 and has been respected for years, flipping between support and resistance. Right now it's support. The upper one falls from the December 2024 top and acts as resistance. A wedge like this often resolves upward, and just last week, price bounced cleanly off that lower line. Now the Fibonacci. I've anchored from the $4.75 low in August 2024 up to the 19 high in December. The closest resistance overhead is around $4, the last rejection zone. Above that, $4.75, the major support we lost in January. Then the 786 level at $6.40. Underneath us, the line in the sand is $2.50 at the wedge, and below that, the 1618 extension near $2. Here's the part most people overlook. The Fibonacci Relative Strength Index at the bottom of your screen. It's climbing out of oversold and turning up. But the real tell is the bullish divergence I marked with those yellow arrows. Price is printing lower lows, while the RSI prints higher lows. Momentum is quietly building underneath a falling price. That tends to show up right before a downtrend runs out of fuel. None of this happens in a vacuum. Bitcoin dictates the whole market, and it decides whether UNI moves at all. On its weekly chart, Bitcoin near $64,000 is still holding its 200-week moving average, that green line. If it starts closing 2 or more weekly candles below it, we're likely looking at a longer bear market, possibly into the fourth quarter of 2026, and a bullish Uniswap reaction gets very hard. Not impossible, but hard. I'm watching Bitcoin's resistance at the 1618 level near 72,000, plus those 2 descending trend lines falling from the all-time high. Bitcoin is the permission slip. UNI is the trade. Here's how I'm positioning. My accumulation zone, the green box, sits between $2.30 and $3.30. I've held UNI since 2021, took major profits between $10 and $15, and started rebuilding around $3.50 in February. I'm scaling in patiently, not chasing. For short-term traders, a weekly close below the wedge is the invalidation level. For long-term holders like me, this is still accumulation territory. My upside targets follow the fibs: $4.75, $6.40, 8, 11, and a full retrace toward 19. I manage it with a trailing stop. First target hits. My invalidation moves to entry. Second target, it moves to the first. The position pays for itself as it climbs. And there's a yield layer most people forget. I've got UNI paired with wrapped Ethereum in a liquidity pool on Arbitrum, averaging around 45% annually over the last 30 days, collecting fees in both tokens while I wait. Let's weigh it honestly. The bull case is simple. Bitcoin holds its 200-week average, the wedge breaks upward, the fee switch flips, and that monetization gap closes right as institutional flows accelerate. Then the $100 target starts sounding like a roadmap. The bear case is just as clear. Bitcoin loses that average, the market slides into a longer winter, and Uniswap flat holder growth becomes the headline instead of the footnote. Notice this is backloaded. Even the bank's own ladder only sees around $6.50 this year. This is a position trade, not a quick flip. What changes my thesis? A weekly close below $2 would make me re-access. Until then, I let the chart decide and keep accumulating with a plan. Here's the thesis in 3 lines. Uniswap has the fundamentals, the institutional attention, and a chart coiling toward a decision, but the value won't fully flow to holders until that fee switch turns on. The gap between $3 and $100 is really just that one switch nobody can schedule. And the chart, with its wedge and quiet divergence, may be front-running the answer. If this gave you a clearer framework, hit like and subscribe. It helps the channel reach more serious investors like you. Now, if you want to see exactly how I'm executing this in real time, that's what the Pro Capital Vault is for. It's my private community, accessible through the YouTube memberships on this channel, with live portfolio tracking, my exact accumulation and de-risking zones, weekly live strategy calls, the Sunday prep report, and direct access to me. Tap the join button below, use the link in the pinned comment, or scan the QR code on screen, then sync your YouTube account to Discord, and every private channel unlocks automatically. It's working side by side, not watching. One question for the comments. If Bitcoin holds its 200-week average, do you think UNI tags $4 before this year ends? And if you missed it, watch my last Uniswap video. This one builds directly on it. None of this is financial advice. It's my own analysis and strategy, so always do your own work. Much love, and I'll see you in the next one.